All right, so crypto markets have bounced following equities in a higher rally that many analysts fear may be a short-lived bull trap. Or is it? Are there signs perhaps that the crypto winter is at an end? To help us understand what's going on, Ian Lowe from Dacxi joining us now live. Ian, good to catch up with you again. So just taking a look at some of those price movements, Bitcoin over the past 7 days up around 11%. Ethereum, 40% higher. What's going on?
Hi, Andrew. Good to talk to you. Well, look, starting with Bitcoin, we obviously saw a deterioration over the 90 days to mid-June, where it bottomed out over that period at about 18,000. And it's currently sitting at about 22,000. So there's obviously there's a 20+% recovery over that period from mid-June. And over the last 7 days, it's up 11%. And that's really just as inflows have lifted over that corresponding period. Historically, floors such as what we saw in mid-June have been followed by an appreciable sort of market lift. For everybody that will tell you that, this is the dawn of a more positive crypto market, there are others that say, look, there's further price softening that remains a distinct possibility. So look, I think unless you're very, very close to the analysis, the view is that short-term crypto is going to remain, very likely to remain volatile. And we just encourage people to really focus on the top-tier coins that are investable and to take that medium to long-term view. But correspondingly, that volatility, in particular, the price softening that we saw in that 90-day period up to mid-June, it does accelerate the maturity of the industry. It shakes out the cryptocurrencies that are unsustainable, the companies that are unsustainable, and we've certainly seen some of that as well. So these are part of the market cycles that accelerates the maturity of the industry.
Yeah, so I mean, there's nothing in the background, certainly the macro picture, that's changed significantly, which would suggest perhaps there is a turnaround in the broader crypto market. I mean, we're still seeing that strong correlation, particularly with the NASDAQ, for instance, as far as Bitcoin's price is concerned.
Yeah, that's right, Andrew. And look, there are some, you mentioned Ethereum. There are some interesting sort of subplots in crypto markets. Historically, in very general terms, crypto has sort of risen and fallen with the tide in Sept, all of the different cryptocurrencies, certainly the majors. We're starting to see some separation emerge this year. I mean, Ethereum's up 40% over the last 7 days to a little bit over $1,500. And that's driven really through this, well, largely at least through an upgrade in the underlying network technology of Ethereum blockchain. So they're transitioning, as I think most people would understand, from a proof of work to a proof of stake methodology. That will create enormous efficiencies in that particular blockchain. It'll make it more scalable. It'll make it less energy intensive. And there's a massive, unlike Bitcoin, which is really a store of value, Ethereum is a utility, or the analogy of a utility is much more appropriate. There's a huge ecosystem of finance, gaming, entertainment, all built on that blockchain. And so the anticipation, I think, is that that upgrade will have distinct benefits, drive more adoption. And with that, I think it's one of the reasons we've seen strong support in recent days and weeks in anticipation of that upgrade to proof of stake.
Yeah, in fact, that
which is scheduled for pre-October.
Yeah, indeed. So what do you think is likely to go? Is that sort of that upgrade now being built into the price at the moment, or do you suspect perhaps at the time that it's completed, we'll see some significant movement?
Look, if you read the commentary, there's a lot of very optimistic commentary around what Ethereum could do this year off the back of that upgrade. I think the sort of disproportionate lift in or strengthening of the price in Ethereum could be partly due to the anticipation around that upgrade. There's a lot of work going on in the background which blockchain developers are close to. So I think they would have a view that upgrade looks, like it's on track, and there are distinct benefits for a very large ecosystem of players that use the Ethereum blockchain. So that's probably the most obvious reason why Ethereum is up disproportionately to most of the rest of crypto market. But look, I think across the board, in the short term, it will remain volatile.
Meanwhile, yeah, there are those risks there in the broader markets, and in fact, we've just had the first day of hearings into Celsius's bankruptcy hearing. Plus, we've got the first meeting of 3 Arrows Capital creditors as well. As far as Celsius is concerned, it's been revealed that 500,000 creditors owed more than $5 billion. So, I mean, this is what have we learnt from at least that first day of hearings there, and just how many people are affected?
Well, I mean, the fallout's enormous, and look, I think there's one really, really important thing that emerges from this that I think the world understood before the failure of Celsius, but it's worth restating, which is that counterparty risk in the world of crypto is really, really an important area for particularly everyday investors to drill into and understand. So in the case of Celsius specifically, and so this idea of understanding where your crypto assets are actually being held, who has custody over those assets, what protection exists around those assets, and is the custodianship of those assets an independent custodianship, independent of the platform or organization through which you acquire those assets. But all of those first principles are really just so important to restate. In the world of crypto, there is an enormous amount of financing that goes on between different players in the space using client assets to fund all sorts of different programs to produce revenue. Some of that revenue is passed back to the underlying holders of those assets. But in the end, what everyday investors really should keep top of mind is having a very clear understanding of where the custody of the asset that they have purchased ultimately lies. And as I said, are there protections around that custodianship, and is that an independent custodial relationship? That's incredibly important, and the Celsius experience, I think, points to the importance of that.
Yeah, and of course this comes at this time with the absence of significant regulation, which many jurisdictions are still contemplating at this point. In fact, Ian, the European Central Bank releasing a report outlining the risks in crypto markets at the moment. So it's one thing to identify those risks, but of course you need a response then.
Yeah, exactly. So look, that report, not surprisingly, is focused on areas in particular like DeFi, stable coins. Obviously, given the failure earlier this year of Terra, that's no surprise, and they are obvious areas for regulation. And I think what the ECB has come back and said is that this is now really urgent, right? These ecosystems are growing, the ownership base is growing, the need for regulatory frameworks across the board, but in particular areas such as decentralized finance, stable coins, etc. The need for regulation in those areas is critical, and the industry embraces that. The industry's been lobbying for those regulatory frameworks tirelessly for a couple of years now, and it's really the regulators that are, it would appear at least, looking like they're catching up, which can only be good for investors.
So, Ian, looking forward, I mean, you mentioned the merge with, as far as Ethereum is concerned. What else are you looking forward to, other than obviously being a thaw in the crypto winter?
Yeah, look, I think our view is that this year is likely to remain flat and volatile along the way. we might see some price recovery in certain areas. It's very hard to pick the timing and quantum of those as people would expect. But really, it's this next wave of crypto utilization around things like tokenization, the utility that we'll start to see where apps that people are using to solve everyday problems and create everyday convenience increasingly are powered by blockchain. So it's that everyday utilization of the underlying technology that really will drive this next wave of value accretion. And so our expectation is that certainly in the short, possibly to the medium term, markets will remain volatile, very, very difficult to predict with any accuracy. And beyond that, into next year, we'd expect to see a next wave of growth off the back of a more mature, more regulated industry where the utilization of the underlying blockchain will start to affect people in their everyday lives in the same way that digital technology did as it relates to the applications for the web and the internet.